Hi, and welcome to this week's episode of Global Money News Review. Sorry for starting off late. Oh, technical. Sorry for starting off a little late. So basically, in these sessions, we have our global news review. We talk about news that affects your pocket from around the world, right? And so, if you haven't already, please subscribe to our channel right here. And click the notification button so you know what's happening and you keep abreast for your finances. Very, very important. So we're going right into it because we've lost some time. And let me see. Normally I would start from global news, but today I'll start from Nigerian news. Um, so one of the things that happened during the week, and I mean, the headline here is that CBN votes to hold all interest rates at 27.5, to hold the key interest rates, the monetary policy rate at 27.5 percent. Right now, what does this mean? Let's give like a backstory. First of all, there was a GDP rebasing event. There was an inflation rebasing event rather during the week. What is that? Before we were comparing our numbers, our current numbers to 2014 economic realities. But now we switched in this event, in this exercise, to comparing with 2024. So every 10 years we review, we adjust the benchmark or the base year for inflation to the 10 after every 10 years. So the next rebasing event should be in 2034. Now, what does this mean for you as an individual? For you as an individual, if you were not tracking the announcement of a rebasing event, then it will look like some kind of fraud because the question is, how can you say that last month um it was 30 something percent and prices haven't come down, nothing has changed, and is now 24%. But I think the first thing to do is to actually understand what inflation is and to clear that misconception about the direct correlation between increase or decrease in price and the inflation rate, like direct. Now, let me explain what inflation is. Imagine if you are driving on Lagos Ibadan Expressway, you are going from Lagos to Ibadan. So think of wherever you are in the world and just use one highway to the other, and one location to another, driving via a highway, right? And so your Lagos Ibadan Expressway, you start off your journey at 60 kilometers per hour, and then at some point you increase to 120 kilometers per hour, so you double your speed, right? And then when you get to 120 kilometers per hour, you get to a spot that the road is not so fabulous and you slow down to 80 kilometers per hour. So what inflation really is the increase or decrease in the speed. But understand that you are still headed to Ibadan. The only time you say there will be a deflation or correction is when you do a U-turn and start heading back to Lagos. But as long as prices are going in a certain direction, right? What inflation measures is the actual speed, whether you increase, you press the gas pedal and you're doubling up, or you are slowing down, but you are still headed in that direction, such that even though you see prices increasing, if you started a particular product, let's say buying shoes every month, and you bought the first shoe for 1,000, right? And the next month you bought it for 1,500. That is a 500 increase. So that's like 50%. But if in the next month you bought it at 1,600, inflation will come down because from 1,500 to 1,600 is about maybe 7 to 10%. Rough math, right? But did the price come down? So for you as an individual, prices are still going up. So what are they saying? However, what inflation is measuring is that speed. Did it gallop from 1,500 to 2,500 to 3K? Or did it go from 1,500 to 1,600 or 1,500 to 1,510? That is what inflation measures. So if you went from 1,000 to 1,500 and it now went from 1,500 to 1,510, you would say that inflation came down, but prices are still going up, just at a slower rate. So it's very important to understand that and build that as a base. Now, what does this whole rebasing do for us? It helps us to actually measure things effectively on a macro level. So we talked about individual impact. Now, on a macro level, what it does is that it gives the central bank and key decision makers in the economy like a better base of what's it called, of data, of economic metrics, of consumer spending trends, to make proper decisions that impact us in good, like having good data or good basis to make decisions. That's literally what it does on one side. On the other side is good PR. Simple as short. The fact that you were at 30 something percent is like high inflation. Like that is really high. And then they now say moderation in numbers. It's like good PR. Something is happening. It's not so bad, right? But of course, we know that the PR is short lived. There's nothing to support it. But yes, it's still good PR. Now let's come back to the economic financial investment impact of this scenario, because we might see these things and not be able to connect them with our pocket. The first thing is this: for the first time in a long time, the central bank held key economic rates stable. Why? Because they want to watch and see. If you've dropped your inflation from, if you dropped your inflation from, if your inflation rather has dropped from 34 to 24, 36 to 24, right? Let's see how the economy adjust to that, right? Adjust to that reality. Let's just see. But what am I saying for you as an individual? You see all those 20 something percent, 26% on treasury bills. When we've been saying that it cannot continue forever, these are the little changes that come to the point where you would say the central bank is cutting rates. Now, there are two things. The question is, do you think inflation is going to keep going up in 2025? Whilst we don't expect like a significant crash, like think of a U-turn, you are going towards Ibadan, now you're turning back to Lagos. We might not see that. But what we most likely will expect is some form of stability. Why do we say that? What are the drivers of inflation in Nigeria? FX. We've seen some stability in FX because of the high interest rate and offshore investors coming in, and just general stability globally, right? Relative. We see some stability in our FX. That's one. And second thing that we've seen is that because of the Dangote for refinery, Dangote refinery, we've seen some stability in one, the supply of fuel, which also spikes things, and then the actual price, because he's paying in naira, he's selling in naira, so we are hedged sort of. And then finally, because of all this whole story around making America great, oil prices, and then also we've not had any shocks, like we've not had any shocks so far in the year, in the Middle East. So oil prices are within a stable range. If these things continue like this, then we expect that inflation, we might not see that or 1K to 2K to 3K in a short period that we saw last year. With that, we think inflation would actually moderate. Moderate. This case, just to know, the federal government is planning for 15% inflation. Let's see how that goes. Let's see. But what am I saying? For you as an investor, if inflation is stable, right, then there's an incentive for the central bank to cut interest rates. If the central bank cuts interest rates, first of all those commercial papers that you're seeing, all those bonds that you are seeing at very high and juicy rates is going to start coming down. So if you are waiting and thinking there's something in the future that is going to make it higher, it doesn't look like it will. That's one. And then when those rates begin to come down, stock prices will begin to go up. Yeah, so bear that in mind. So if you are sitting on the sidelines, right? Hey, hi, hi, Iola. Hi, I see you, and hi, Business Online. So if you're waiting on the sidelines, right? The fact is this is the time to jump in, right? In my community, we're sharing deals during the week, right? This is the time. This is actually the time. There's a logic, and when we say that the economy will correct and this yield will come down, these are the little things. You now wake up and say, "Oh my goodness, I saw bonds at 20. Why is that 15 right now? I want to buy 20." And everybody says, market has moved. That is what happens. So if you are sleeping on the sidelines, haha, I wish you got speed. Also important to tell you, please share with your friends, share this video with your friend if you're finding it useful, and also subscribe to our newsletter. I'll drop the link shortly, so that you just keep aware. It's easy. This is simple English. That's what we take pride in. We explain economy and investing in simple English so that you can actually relate it to your pocket. Very, very important, because a lot of people are sleeping. We need to wake up. Yeah, we need to wake up. Now, second news will be out of Africa. Okay, so Malawi bans export of minerals and gemstones from the country. Now, on the surface, it just looked like, okay, why are we doing this? Now, they're trying to reorganize, restructure, blah, 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 the sector. So is it good for them? Yes, if done properly in the long term, it will be good for them, right? If done properly, to be good for them. But in the short term, what you have done Okay, when I say in the long term it will be good for them, what would they end up doing? They would sort of streamline their mining, refining. What's it called? After you mine, there's like a processing, right, to increase the value of the actual gemstones, right? Before now, what they were exporting was a raw material, and I'm saying let's not export raw material anymore. Let's create an ecosystem. Sorry, let's create an ecosystem that would increase the value so we get more revenue. So that's where it will be better for them in the long term, right? The system where they can increase the value and sell it at a higher rate. So they'll get more revenue, government will get more taxes, everybody's happy for it. There'll be more jobs because that whole processing, you hire people, you'll get skilled, you train people. So the economy will build up. So that's the game plan. But it obviously is a long-term game plan. However, when you shut things down like this, it also does have its own side effects. For example, you shut it down. There are some small miners who are depending on these little sales here and there to live, right? You've just thrown them under the bus because they don't have the liquidity of the big boys that can navigate while they are lobbying or they are trying to establish those manufacturing factories and whatever, right? So you've thrown them under the bus. That's one. Secondly, this whole shutting down could lead to a massive black market. Because that's the reality. People, when you get people hungry, right, they just become creative. So it could actually lead to a massive underground black market for these gemstones, which we really do not want to do, right? And then also, in terms of cons, we could find that they might not end up doing what they said they would do in the time that they would. And so we might see a period where people suffer and then restore back to the beginning, because that has happened a lot. So what American governments need to move away. I mean, and one more thing to add is the fact that these kind of decisions spook investors. Very, very important. And the end game of this is for you to have investors coming in to bring in money. If you can do this with one sector, you can do this with any other sector. So if my business in this country was exporting raw materials and you come and shut it down in one move, what's the guarantee to the next investor that you won't do that for another sector when it's not working? Move away from black and white to black, then gray, transitions. It is always better. And I think that's where that risk of investing in Africa, these are the things that make people more skeptical or price higher when they are investing in Africa. Because literally, if I have been doing this thing for 30 years, you literally cannot come and say you want to shut it down, even though you have a right to. But there should be like a transition period. There should be laws that would say that if you want to do this, you want exporting this, you must invest this amount into blah 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 blah. That is how it is done. So we wish them well, because this whole policy could backfire if not implemented well, if not followed through. Because I mean, look at Ghana. Ghana is trying to, they're actually building, we talked about the commodities board, we've talked about what's it called, pricing. There are some things that they're putting infrastructure in place while leaving the market as is. They also built their own gold refining, I'm not sure what the word is, but gold refining factory, right, for the first time. So what are they doing? They are doing the same thing but with a different route. They are going in stages. At some point I can see how they would ban exporting raw material, the gold raw material, that you must buy, you can only export the processed good. That is the way to do it. Yeah. We wish them well. And then finally, out of UK, I mean, this is one thing that we've also always talked about in the club. And if you don't know what we're talking about when we say the club, it is the Money Week Club. And this is powered by the Money Club, and this is my t-shirt. Yay. So in the club, what we talked about, so we have members in the UK, and a lot of times there was a time when I was highly invested in doing assets investigations, analysis of stock market, the bonds, blah 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 in the UK. But after a while, I just realized that even the big boys in the UK are sending people to America. Yeah, who am I? Who am I? And so we moved, we legit moved most of our investments from the UK people to the US. And it's literally easy. Like, I mean, we point people in the right direction and it's quite easy, right? But why do we do that? Because the UK economy is a little something how somehow. Yeah, it's not really great, right? Now what has happened? What is the news? The UK shares which are trading T plus one. Now, I started my career as a trader, so when I read that, like, oh, I know what that means. Basically, if you buy a stock on Monday, you would get your stock. So you pay, you would do the deal on Monday, but you'll actually get your stock on Wednesday and you'll part with your cash on Wednesday. So that's settlement day. So T0 is the day of the trade, T1 is the day after, and T2 is the third day, Wednesday. Now, what they are saying is that they are moving their settlement, their standard settlement from T2, which is Wednesday, to T1, Tuesday. Now, why is this a thing? First of all, let's just highlight that Big Brother America did made this move in May last year, May 2024. So they moved from T2 to T1, and this is UK just trying to align with them, right? And the idea is that they're going to bring in investors and it's supposed to attract investors, but that's not all that will attract investors. There must be something happening. There'll be something happening because a lot of listed UK listed companies are moving to other markets to get listed to get better valuation because the market is just very, very somehow, especially for those that do a lot of international trade and are doing quite well because the stock market is not fabulous. Now, why are they doing this whole T2 to T1? Because it's just generally seen to reduce counterparty risk. So there was a time when some banks shut down a while back, right? And what happened was that you had closed them with a deal with them on Monday, and they were still alive on Tuesday, but by Wednesday they are shut down. So it's generally seen, and then you couldn't get your settlement. It was a massive mess. But it's generally seen that that space between Monday and Wednesday is a counterparty risk. There's a counterparty settlement risk there. So bringing it back by one day is reducing that risk. But would it make the market better in itself? I don't think so. Also grappling with the fact that inflation rates are not going in the direction that the Bank of England wants it to go. And so can they cut rates? No, they can't because it will spike inflation up more. And can they take rates up? No, because it will choke people more. So what are we going to do? That therein lies the problem. So if you are in the UK, understand the things that are happening in your environment, or if you have connections with the UK, understand that the economy in itself, and I mean traveling to the UK, you would see that it's not really the way it should be, even though there's a lot of covering and stuff. And the government, the Bank of England, is trying to do as many things as possible to get fresh inflow in. But the thing that really attracts fresh inflow is trade. Is actually selling something that people want. So I wish you all good luck in that journey. But yes, thank you so much, everyone. If you haven't already, please subscribe to this channel. Please share with a friend. We basically talk about the market economy. So we have this live sessions on Saturdays, and then we post regular videos educating about investing, what investment options, blah blah blah, on Thursdays. So it's just best for you to stick around, subscribe, share with a friend. And we'll be sure. And of course, if you have questions, drop in the comment section. I see that there's some people that did not say hi, but I say hi to you also. And at some point, we'll actually start featuring people that come regularly online, that join us regularly online, as just to connect with our audience. And finally, we do have a newsletter. If you are not a member of the Money with Club, then this is like a sneak peek into what's happening in the club and what we share with people. Thank you so much and have a beautiful, beautiful